Good evening. This is the Elliott Wave update for the S&P 500 for Tuesday, October 26th, 2021. Another interesting day for the S&P. The markets started the day by moving higher as we anticipated the incoming reports, and that Facebook actually opened up, and so everybody felt happy about that. So we just kind of bought up the balance of the market. In any case, what we saw was that the S&P got within a 1.5 of that resistance at 45.9150. It got to 45.90, and in my book, close enough, it reached resistance and it pulled back. Now, what I found interesting is what happened after, because as I anticipated that it would eventually break, and that I had initially thought, okay, this completes this interior. So we're in a minute wave 5. And so that wave 3 of 5 likely completed here. Well, then I went and I looked. And again, how I did it is I brought the line chart back in to view. And it gave me a different picture. And it actually put the orthodox top at 45.8650. And we could take it down to the hour, to a 30-minute chart, and it's going to put it a little bit higher at 88. And that fit very cleanly when I go back out and now put it into the candle. And now let's open that up. So again, remember, we're counting 5 up to complete a minute 5, and then turn a minor wave C, and then turn an intermediate level B wave. So here we are again. So we have this wonderful rally. I was originally just thinking, okay, that completes 3. But if that's the case, then where should a 4 come in? That would put 4 to come in here. And look at the sell-off after, and then the sell-off after. So we're not just correcting it once. Now we're going to go do it again. So in other words, this went way too deep. It was a total rejection of that high. In fact, it was $30 of rejection, 30 S&P dollars of rejection down to the session lows at 45.60.75. Now, we ended up doing a 3-wave rally off of that. So if it had continued, it would have really created the situation where it's like, okay, that was just an anomaly. People had to get out, whatever the situation, and we're now going to return, and we will again break, because at the time, we still were waiting for AMD, Microsoft, Google to report today, and Twitter to report today. A lot of the, we had many earnings reports today. So, but the market failed again. And these earnings reports came out, and they initially were well received, but then kind of hung out and waited for the press conference, or the conference, or the conference call after. And they didn't really improve a little bit, but then it falls back again. So if we take a look, AMD initially came out and traded up to 125. You can see now it's basically unchanged. And we had Google. Google initially went up to 2840, I believe, 2,840. Then proceeded to drop all the way back down to 2,700. So instead of being up $60, it dropped 80 from the close, because it got down to 2,700. So it closed at 27.86. So it dropped over $80. Now it's back 27.55, 27.61. So it's right in between, but still down. Microsoft closed at 310. Earnings come out. They initially kind of played around, took it down to 308, brought it back up to 315. Now it's sitting unchanged. So what's the market to do? So I started to really kind of put this together, and I have to balance it out against price action, right? And what really is kind of going on, and what I think could be going on in the market. So here's how I'm putting this label together, that we're counting this minute wave 5. Within it are 5 waves. Here we have 1, 2, 3, 4, 5. And it ends in a very small failure, right? The high previously was 45.90. And if that completed this internal little third, like 1, 2, 3, 4, 5. So 3, 4, then wave 5 subdivides. Remember what I said yesterday? I said we're in that 5th wave up, the completing wave, and it is subdividing. 1, 2, 3, 4, 5. 5 ends in a small failure. The reaction afterwards gives a lot of support to that being the case. They just turned around and sold. These are 30-minute bars. Sold it for an hour and a half for $30. It just pushed, 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 and pushed, pretty much nonstop. We had some, these are tails, so there was some movement. But it basically left a very clear message. And if this only completed 3, and we were looking for a 4, and this was A, B, well, C is certainly on this level. No, that was 1. This can't be a 4. It broke that. This can't be a 4. It broke. It's breaking all the way around. Even if I stuck this 3 up there, first of all, this ends up being, it would still be 3, 4, and 5. That 4 would be here, the 5 would still be there, and end in a failure, because this is a little bit too big. So I've not put the balance of what I believe the count would be above this right now, because stranger things have happened, and I know I use that phrase often, but the markets are squirrely, kind of crazy, and every time they walk in and attempt to sell the market off, they turn around and buy it. They turn around and buy it. And we still have Amazon coming. We still have Apple coming out. Apple basically down or basically unchanged at Bobby's earnings. So they're still having a lot of confidence in Apple. Amazon started to move down. So it's down a little bit from where it closed. Not much, not bad, because Google is doing a little bit of a recovery after being sold off. So it's up about $50 off of that post-earnings low, around 2,700. So, we still have a lot of trading to do prior to putting the cap down and sending this down the aisle before I'm going to put that intermediate, even a minor C and intermediate B up above 45.91, like up here. But I'll tell you what will seal the deal: a break below 45.51. And we're not that far away from it. We are basically $11, $12 away from breaking that level. And that basically, in my book, will seal the deal, because that's where I have wave 1. And I don't care what 4 this would be. Can't over that, put to the back. So it turns into something totally different. And the only thing I believe it could turn into is a downward spiral. Now, this did make no new all-time high. So this, in my book, if I'm going to go, let's go out to the 4 hours, so I can just take a quick review of this. This still broke to new highs, but I'm leaving that as the end of all of those advancing sequences. And really what we've got is it's going to be still a corrective structure, and it's still going to be, but on a primary level, it's going to be wave A. But right now we have intermediate A. This is likely intermediate B up here with the new highs. If that is the high going to be at 45.90, then the calculation is going to be that the C wave will come in at 1.618 times the length of wave A. And how am I going to measure that? Well, I'm going to now go out and just put it up there. I got to go from that high down to that low, up to the, oops. No. Difficult way to go. And then up to that high. Now, 1.618 is right there. So this is what I would be looking for. If that completed the sequence, and I'm now looking for my downside, that C wave down that I've been discussing and saying that's my expectation, that's where I would anticipate it's going to come. There's a minimum, I would think, right there, 41.22. Even as low, and it could certainly surpass that. But this really gets itself going. Don't forget, this is just intermediate, but we're correcting up to a supercycle level, which is a supercycle wave 4. And it's going to consist of an ABC on a cycle level, and then ABC, et cetera, all the way down. So this is actually May 1st, ABC, because we're doing minor, and now we're completing, possibly would be completing an intermediate level ABC to complete the primary. So it's building blocks, and we're just starting. So I think that this is just part of the initial 3 waves down right now. So that's what I'd be looking for if that completed it. Now I'm going to take that off, and I'm telling you why, because we're not declaring it yet. I'm not. I've seen stranger things from all these markets, so I'm going to wait. But here's what we can anticipate. We need to continue to trade what's in front of us. So here's the signs that we're going to be looking for. First thing, let me start back up on that daily chart. I'm looking at the daily to see how this all closed today, right? Negative. Look at that topping tail. And it's closing right there. Now, still serious damage hasn't been done because we got to start breaking the daily moving averages coming off. We have the daily 4 at 45.47. We have the daily 8 at 45.09. Serious damage can't be considered unless it starts to break below 44.60. To the daily chart, that is, okay? The daily chart. We're looking for more serious damage. That's where you'd start to consider, okay, the daily chart's telling me negative, we're going down. So we still have a lot of downside activity to put in if we're going to start confirming that we're into now a trend moving lower and stop moving higher. So that's why I'm not declaring it yet. The daily is hedging, hinting, sitting right above some support, and then sitting just basically above the 4. Now, so what do we have? We have 45.51. Back down to that hourly. That's right there. The tops. All right, so let me open this up so we can all see it. And then you don't want to do it. Try that again. There you go. Right there. 45.51 and a half. That is my first line. Then we have that support from on the daily right below it around 45 and 45.46. Then we start to break down, and you can see how quickly this thing can move. If they took it down $30 real quick this morning, then certainly they can take it down another 30 tomorrow. Because if the whole mental attitude changes, tops are in, our most important earnings reports have now been out. We're not jumping for joy. We're not busting down the doors. You're going to find a lot of people that were strong buyers are going to turn seller. You're going to see a lot of option trades start to be reversed, and we're going to start coming in. So a lot of change will happen. There's a lot of bullishness that's been sitting in this market. They bought it up a lot. And so they're loaded. They're sitting with their hands and their fists and everything full. So if they start to unwind it, this down, dropping 30 from the high is going to seem like child's play. Remember, many, many times markets go down faster than they go up. So we need to pay attention to the overall market mood. What's changing? What can they, if they're still going to be bullish, what are you going to hang your hat on? Obviously, we're not seeing strong, forward guidance anywhere today. AMD, maybe a little bit, they just pumped it back up again. So now it's up 60 cents. It's not flying up dollars. And so what we got left? We got Amazon and we got Apple. Can they save the world? Yeah, for a day or two, I would imagine. So that's why we can't count it all down yet. I still have to allow, but I'm leaving that in parentheses. So I think that we'll get a lot more information tomorrow, and then of course the cap being put on Thursday. So for tomorrow, that's our signs. We're going to continue to look for the signs of a top having been put in place. So that would suggest that now rallies will come in shallow unless we break. If we can manage to break about 45.80, that would give much needed support to the upside remaining intact. I think failure to do so would just be a corrective bounce and another leg down. So either way, we kind of can take our cues from that, at least for tomorrow. When the broader markets, the players from around the globe can take all this information that's now been presented in these earnings reports and the guidance from the CFOs and the CEOs, et cetera, et cetera. Another thing to bear in mind that what took place today, they came in and they took Tesla basically almost up to $1,100. And then it was like somebody removed the fuse and the lights went out. And when they came back up, Tesla was down. And that helped to precipitate this. And then this. A lot of it was Tesla falling out of bed from the highs. From everybody like storming around going Elon Musk, talking about I'm a trillionaire now, blah, blah, blah. Okay, people decided that's it, we're out. And they came in and they sold it. And I imagine it was institutional because you're looking at a stock that's over $1,000. So I know how many folks can really have that in their portfolio. And if you did, you were looking to get out of it today because you just $100 came off of it real quick. And so suddenly it became more of a situation like, oh my God, my portfolio just dropped. In any case, this is what I'm going to be looking for. So the market tomorrow, I'm going to play it bar by bar. That's the only way that I can stay in touch with price action. We're going to be using channel lines and all kinds of techniques and help. The moving averages will become extremely important. We're now below that 20, it's now turning lower. The 8 will break below the 20, and that's going to add more fuel to the fire. If the 8 breaks below the 20, likely the market will have dropped below the hourly 50. If that's the case, then we're looking at 51. And if that's the case, that breaks 51, we start to lose a lot of support areas because they drop real quick. And then we have this, which is just really not necessarily support. It's just the bottom of a previous fourth. It should give some support there, but I don't know how strong it's going to be. And then below that, we have the 200 on the hourly. So if you take the chart down and you really just start looking and studying your different levels, we started at the daily. So the daily's not even broken the 4 yet. So it's got the 4, the 8, and the 20, and then the 50. And that before we can start to talk about weakness on a daily chart. So right now we're talking about weakness on the hourly. Now we're down to talking about weakness as it presents itself on the 30, and we've broken below the 50-day moving average, the 50 moving average on the 30-minute chart, and it did produce some acceleration. Now we're catching up. The 4 is already sitting down here. The 20, the 8 getting close. The 20 turning lower. And once they get below the 50, it's going to add fuel to the same fire. Okay, so as we continue to move down, you can build your picture to know what's going to be happening. Here, this one's interesting. That's not what I wanted. Now let's go back out, go back down. I want to show you how this all falls into line so that you can do this and see it. Look what sits on top. So for the 15-minute chart, this is next. They're going to start to move down and break below the 200. First the 4, then the 8, then the 20, then the 50. And if that all happens, it is pointing to a stronger negative day. All right, so that's how I build that picture. Now, back out to the hourly, we've got to play it accordingly. And then this just does not present a real bullish picture to me, but I'm not ready to call it over. So I need more from it. And initially off an hourly chart, I would want to see 5 waves down. Right now, I don't have it. I don't even have 3, because we haven't broken below 45.60. That's where I'm going to leave it. I'm going to wish everybody a very good trading day tomorrow. I imagine there will still continue to be additional reports that will be coming out of various NASDAQ stocks. The larger players, I don't know, but we'll continue to look at the reaction to what we received today, and that will be from AMD, Google, and Microsoft. The next update will be Wednesday the 27th.